What's up, guys? Larry the Mortgage Guy here, your mortgage insider, and I wanted to touch upon a topic that I explain a lot to of my friends and family, and of course new home buyers, right? So I did actually make an official video. It's very stiff, right? I took a lot of different versions and clips and I put them together, and again, being your mortgage insider, my goal is to be your friend. My goal is to be your confidant, your your backup, your insider, right? So I want to make it a little bit more informal. Now, excuse what I'm wearing, suit and tie. I just came from I guess you can call it an interview. People are trying to recruit me. And obviously, if my boss found out or knew about this, it'd be bad. But the thing is, if he was asking why were you doing that, I'll tell him, well, number one, I always hear every person out, right? That's how I ended up in the business, anyways. Number one, number two, I want to know about my competition. I want to know what they're doing, what they're offering, right? So if someone was to mention the company that tried to recruit me, I know what their inside information is. I know what they can offer. I know. Literally, their product mix and such. So it kind of gives me an opportunity to know the business a little bit more. Okay. But anyways, back to the topic at hand. So sorry, I usually will be dressed more casually. Okay. Pre-qualification and pre-approval. People kind of throw these terms interchangeably. It's not the same thing. It is semantics, right? I mean, some branches or lenders or banks are going to use one term for another. But essentially, there's two different levels, okay? And that's how you really should think about it. So just think level A and level B. For this purpose, and for most general purposes, you'll find out that level A, meaning the first level, is going to be a pre-qualification. So for the rest of this video, that's what I'm going to talk about, the pre-qualification being A, and for B, think pre-approval. Okay, so qualification and approval. What's the difference? Well, the way I was trained and the way I actually do my business and the way you'll find a lot of different businesses do business. And you can look this up. There's a lot of different resources like Investopia and I think maybe the realtor.com or whatever. There's some sites out there that will support exactly how I am translating this, okay? A pre-qualification is an initial review of your credit. They're going to do a hard inquiry, look at your credit scores, right? They're going to see what you're working with in terms of your debts, right? They're going to see if there's anything crazy judgments or bankruptcies or foreclosures. They need to know this information, okay? Those things will stop alone. Okay, so they need to look this up and they need to find out what's going on. And if it's not on your credit report, then 99% of the time you're good. But if it is, we got to deal with it right away. We gotta manage it. We gotta take the bull by the horns and figure out what we need to do in terms of that particular line on your credit report, right? So it's an initial review of your credit scores, your credit history, your debts, things of that nature. We also usually take stated information about you, your work history, whether you have 1 year, 2 year, 5 years, whatever. We need to know about your income. How are you getting paid? Are you getting paid hourly? Are you getting paid salary? Are you getting paid commission? Is it per project? Are you a temporary employee or not? We kind of get it's like dating, right? We're trying to find out all the vital statistics about you to see if you're a good mate, if you're someone that we believe that we'd be willing to date, right? So that's really what a pre-qualification is. All organizations do it differently, but it's basically looking at your credit information, see if there's anything crazy going on, and taking your stated information and kind of doing the calculations of your ability to repay, which of course involves your debt to income ratio, DTI, right? It involves, of course, your scores. Depending on your scores, with certain guidelines and certain products out there with the investors. When I say investors, I'm talking about Fannie Mae, Freddie Mac, Ginnie Mae, and others. They give you a certain amount of debt to income ratio to play with when it comes to buying a home, right? Essentially, how much of your income can be used towards buying a home, right? do you have a lot of debt, so that shrinks the amount of home you can buy. If you don't have much debt, but you have a lot of income, then you can buy more home. Hopefully that makes sense. Okay, fractions and math and division, whatever, right? But essentially that's what a pre-qualification is. We find out if everything looks good credit-wise. If it does, well, how much can you borrow? Based on the state information, what you told me, what I have to trust you to give me accurately, I try to figure out how much home you can buy. That's a pre-qualification. And, you use that to kind of know if you can move forward with the process or you need to stop and kind of reassess, right? So that's what a pre-qualification is. Some people want a pre-qualification so they can know where they stand, so they can make decisions. Some people want a pre-qualification because they want to start looking at a house right away. The truth of the matter is you probably should not do that until you actually get officially pre-approved, which of course is going to be the B level versus the A level, right? And I don't know if maybe I should have made that backwards, but A, because A usually is associated with the best, but in reality A just means initial, right? Initial review of your credit information, whereas a pre-approval is a more thorough. Now I'm going to explain to you what a pre-approval is versus a pre-qualification. And once you hear what a pre-approval is, you'll know why it's different from a pre-qualification. Okay, so with a pre-approval, first of all, we need the pre-qualification. We need to know credit looks good and what you're telling me sounds good, right? If that all works out, then I move on to the next step and it gets a little more intimate. Like I said, it's like dating, right? So now instead of just asking you, how much do you make, now I need to know. I need to look at your pay stubs at least 30 days. I need to get W-2s. So I know how much you made last year. What did you clock in at? I need to look at your tax paperwork because the taxes pretty much kind of, tells us what it is that you made last year. Do you have any write-offs? Are you running a business where you're making $100,000 but you lost $50,000 because you wrote off $50,000 worth of losses? There's lots of information I need to take a look at so I can calculate your income. Okay, and again, income is very important. It's your DTI is what determines how much you can borrow. So I need to know exactly what your income is, pretty much to the penny, right? Or at least that's the effort. That's what we're trying to accomplish, is get it to the penny, right? So I'm going to ask you for this information. Like I said, pay stubs, W-2s, tax paperwork, okay? I'm also going to ask you for bank statements. Why am I asking for bank statements? I need to know that you have funds to close. I need to know that you have down payment, right? And is there anything crazy going on with your income or whatever? Are you do you have obligations that might affect your ability to repay, right? And I know it sounds crazy that I'm asking for your bank statements, but I'm telling you, it's part of the law, okay? Rule of thumb when it comes to loan officers, and this is something that hopefully every loan officer can appreciate when I tell you this. We would never ask you for something that we want, and I say never just in a general way. Maybe there's people who do. I'll never ask you for something I want. I only ask you for something that I need, okay? Because I have so many files going on anyways. I have so many pages of documents going on anyways. I don't want to read more, okay? So when I ask you for something, I'm asking you for something that I have to read, and in reality, I only ask for it if I really need it. Okay, so if I'm asking for bank statements, please just trust me enough, or trust the loan officer enough to give it to them because they need it. Now, if you don't want to give up bank statement information, well, you got to have some sort of way of proving that you're gonna have source to close. Okay, so no matter what, just be ready to provide the information. Okay, yes, you might be able to do loans without it. Not in my experience, right? But yes, be prepared to give me bank statements, okay, last 60 days, right? Why 60 days? Because we have to look at this last 60 days of deposit because we need to make sure you're not funneling a bunch of cash in there, right? Who knows? What if you're a drug dealer, right? Or what if you're you're in the mafia or something, right? I need to make sure that that money is legit, so it has to be sourced, is what they call it, right? So if last 60 days you have a bunch of crazy deposits, we can't source the funds, you're not going to get a loan. Okay. Now, if you have 60 days worth of bank statements and everything looks normal, it looks like your deposit coming from your job, and you have the funds to close, well then it's not a big deal. And your bank statements say exactly what we wanted to say. It says that you have the money to put money down and you don't have any unsourced funds. Okay. I'm gonna ask you for a few more, like I'm gonna ask for your ID, ask for your social security number to make sure that, social security card, not the number, to make sure that everything looks right, everything's spelled right. Your credit report must match your social security card, so that's why I need to look at that as well. But yeah, but based on that, I can calculate true income, and I know you are who you say you are, right? We might do like a title search, make sure that there's no foreclosures or you know, any weird divorce type situations going on where that might stop the loan in underwriting, because that'd be the worst if you have a contract on a home and you're purchasing a home and we find something crazy. It's happened to me before, okay? If you find something crazy in your past history, that's going to stop the loan, right? So we try to get as much information. It's almost like getting pre-underwritten. You get underwritten before you even have a house, okay? But yeah, that's what a pre-approval is. Once we get all that and we have your debt-to-income ratio perfect, and we know your scores are perfect, you have no red flags going on, you don't owe anything to the government that you're not taking care of, then we are confident in giving you a letter that says, yes, Mr. or Mrs. Customer can buy a house at this amount. Go ahead and take their offer if they make one. That's basically what a pre-approval. It's a letter that confirms that we looked at your documents, we did the math, we even verified your employment in some cases if we need to. This person can borrow this much. Go ahead and accept their offer. That's what a pre-approval is, okay? So, the difference between pre-qualifying and pre-approval. Pre-qualification, I'm kind of taking your word for it, and I'm just looking at your credit. That's basically it. You're telling me you're making $100,000 a year. I'm trusting you, Mr. Customer. I'm going to do the math based on that. Okay, if you're making $100,000 a year, you can borrow this much. It's all stated information. Okay, but whenever I look at your documents, I might find out that you're actually only making $85,000 a year because you didn't consider the fact that you wrote $15,000 off in losses, or you didn't consider this or whatever, right? So stated information versus confirmed information. So if you want to know the difference, pre-qualification is kind of a guess based on information that you gave me. A pre-approval is there's no guessing. We looked at everything, we calculated the math, we made sure it was accurate, and it's pretty much as solid as it can be in terms of knowing what kind of borrower you are. That's a pre-approval. Okay, and essentially at the end of the day, that's all that really matters. How are you going to get this home? How are you going to make an offer and get a contract? You need to have something that proves that you can buy the home, and that's what a pre-approval is. A pre-qualification cannot do. I mean, if someone accepts your offer based on a pre-qualification, you probably should question the intelligence of that person and maybe even the validity of the home and the offer and the whole nine, right? But if a person demands a pre-approval, then they're well informed, and they're not going to mess around with BS. They want a serious buyer. So that's the whole point of a pre-approval. Okay. Hopefully that answers a lot of questions that you may have. I'm going to have that video that I made. I'm going to post it on here so that you can kind of reference to that. But again, to me, that was very stiff. It was designed to kind of, market myself a little bit and, help people out. But in reality, it's not really inside information. It's just, I'm just talking. Right? Whereas just when I'm trying to talk to you like a friend, like a confidant, like an acquaintance, someone that you have dinner with, hopefully someday, right? But hopefully that information helps. Like I said, you had a question, you can always call me. I would love it if you hired me. If you didn't, that's okay. You still benefit from the conversation, right? Hopefully. But if you do want to hire me, you want to have any questions or whatever, you can call me 832-606-2193. You can email me at Lawrence, LAWRENCE .lee nationslending.com, NATIONSLENDING.com. Lawrence.lee@nationslending.com. Hopefully you do reach out to me. If you don't, then okay, no problem. Good luck and happy house hunting. Okay, Larry the Mortgage Guy out. Oh, and I'm also, again, Larry the Mortgage Guy, your mortgage insider. I want to get that right eventually. Hey, what's up, guys? It's Larry the Mortgage Guy, your mortgage insider. Excuse the get up. I just came from an open house with a couple of realtors I'm working with. But I want to give a quick disclaimer. I don't know everything, and I don't pretend to know everything. A lot of the information I'm giving you is based off of memory, what I've researched or training, or what I've read. Right? So it's always subject to change or be inaccurate. So if you do find something that I said is inaccurate or non-compliant, please let me know. I would appreciate the opportunity to fix it and, of course, speak about it in future videos. My job as a licensed professional is to give you the best information possible and protect you as the borrower. They call it commanding the confidence of the community, right? So I want to be that guy. So please, if you have any suggestions or questions or something that I'm doing that's incorrect, please let me know, and I would love to have an opportunity to correct that. This is Larry, the Mortgage Guy, your mortgage insider. I'm out.